Happy Monday. This is this week's real estate and mortgage rate update. Let's jump into the numbers. So 30-year fixed rate mortgage, 6.76 national average. This is as of Friday. So a little bit of improvement on Friday, as I'd mentioned. Big PCE report came in. There was some surprises, but kind of in line with what was expected. But still, we saw some improvement. And so I want to jump into that here in a second, but did want to point out that like 30-year FHA, 30-year VA, getting into the low sixes, really good signs. When we jump into the mortgage-backed securities, and I've mentioned this before, this is really the key driver of rates is this bond called the mortgage-backed security. Green and up is good for rates. Red and down is bad for rates. So you can see on Friday, this was Friday's day of trading. We saw some decent benefit and that carried over to today's trading. And a lot of what is driving this benefit right here is what's considered risk off trading. So if you think about equities, stocks, those benefit when like the economy's doing really well, when there's job growth and unemployment is getting low and there's kind of exuberance in the economy. That's when stocks do really well. And since there's a finite amount of money in the economy, that pulls money out of bonds and equities benefit, bonds suffer. The flip side of that is when we have these impending tariffs and the market isn't really certain as to how they're going to impact the economy, we have what's called risk off trading. So money's coming out of equities and flowing into the safety of bonds and treasuries. That's kind of what we're seeing, and that's the benefit that has created these improvements over the last handful of days. And when we take a look at this over like 6 months, we're kind of, if you look at this little dotted line all the way across to here, this is really, we're kind of at the lowest mortgage rates that we've seen really in 6 months. And so it's a good sign. We hope that this trend continues. And then the last thing that I just wanted to touch on really quickly was annual appreciation for the last 83 years. It's missed the mark only these years. So what is that? 7 years, 1, 2, 3, 4, 5, 6 years were the only years where appreciation went negative. And you may recall 2007 through 2011 were really, really tough on real estate. Prior to that, 1990 was down 1%. Every other year, it's been positive. The average over this 83 years is 5.4 appreciation. So real estate's always a strong investment. So if you have any questions, please reach out. Until next time, thanks so much.